Here's a quick look at the market through the eyes of eMiniDayTrader for Thursday, April 23rd, 2009. When we left yesterday, we had mentioned that we were looking at the area in around 35 to 31 to act as potential support. We wanted to monitor the market overnight and early in the morning to see if it could act and continue to act as support. It did, and the market turned around, had a nice up day, finishing right near its highs. So the market really behaved nicely from sort of that, if you will, macro sense. So the video that I just posted on our members website, which by the way usually runs around 20 minutes, it was a little bit longer than that today, gets into much more detail than this quick video of approximately 5 minutes that we do for non-members. And so we're really looking for some follow-through here. We think that the 57 area and then possibly even up to 70, these are the next key areas of resistance. If the market can hold above around 850 overnight, then it's very possible the 857 area will get tested, and then of course if price likes it up above that, then no reason why it can't get up to 870. The market has been pretty volatile, and so we are encouraging our traders as much as possible to use their market logic to take a look at what the condition of the market is, and not just specifically our individual trade types and setups, although obviously we're using them, but to use them with a little bit more discretion, just because the kind of volatility that we're experiencing right now. These are the individual profiles that you can see here. This is today, and it had a good up day, closing up here after dipping down to the support area early in the day. So a couple of back and forth days here, and we could get some more of them. We've got to get up above the 57, 58 area. That's going to be probably a fairly tough area to accept price above it. In other words, spend some time above it of note, because then we'd be looking for another 13 or 14 point rally after that. But that's certainly our next area of likely resistance, interim resistance up to that point around 53. So we had several trades today, and let's just take a look at them here. Here's our 1 minute software, and just taking a look at the trades that we had today. Market sold off. We had a deceleration here. Unfortunately, we didn't get a lot out of that trade, just to break even. As the market came down, we had a couple opportunities to get long, although not the best trade location. First one was stopped out, second one got us some profit. As the market came down here and made new lows, we attempted to get short. That was a break-even trade. As it moved higher, we got long and participated in some up movement there. We also had another trade as the market broke higher, getting long in here, participate in some of this up movement. As it made a new high, we actually had a conflict here. We had a trade to get short here and a trade to get long there. So we made money on the short trade, got long, and ended up with a break even on the long. And late in the day, we did attempt one other trade. Unfortunately, we were stopped out on it as the market rallied up higher to get short in here, and we were stopped out on that trade. So it was pretty volatile as the market went up and down here. Although looking at the market the way that we do on the day-to-day basis, it gave us a good perspective, especially when the market came down into that area of approximately 35 to 31 that we were anticipating would act as support. And you can see that we had a pretty good rejection when the market went down here, gave us a good deceleration bar here, and then started to work its way higher. So using that as the background with the anticipation of the support, you can even see as the market dipped into that area to begin with, it found good rejection and a bounce off of there, and then came back down one more time before it had the nice rally higher. So it was a somewhat challenging day from our individual trades perspective, but as far as looking at the market in the way that we do, it was actually very readable. But with the kind of volatility, especially when you take a look and consider the fact that the market within maybe a couple hours or so had this movement up here of around 7 points, 10 points down, and then some 13-point rally, all within the last hour or two of the trading session. that's pretty volatile. Plus the fact that we're getting some very large range bars here. Some of these bars are like 3 points in range, and that's just a 1 minute bar. So it's making it kind of challenging on the individual trade perspective with that kind of volatility. And so it really forces us to lean into more of an understanding of what the heck is going on in the market. What is the condition of the market? Can we actually identify and trade the cycles of the auction here on the short time frame? And that's where our software really was fantastic for us today, because what we were able to do is go ahead and identify some good containment within the market here in particular, and we knew that these tests above and below were being rejected. Reacceptance back inside, final test here, and then as soon as it moved above there, we knew that the market was good to go. And so looking at the market through those eyes, it really helps us a lot, and that's why a lot of our traders who've been with us for a short period, or not a short, but a little bit longer period of time, are really benefiting with the way that we're looking at the market, and being able to identify the condition, and as a result, good trades based on that, not always just individual trade setups and triggers. So, we would love to hear from you. Just give us an email at info@eMiniDayTrader.com, or go ahead and look at some of our other videos, etc., on our website at eMiniDayTrader.com. So that'll be a quick look at the market for Thursday, April the 23rd, 2009.